Welcome back to the Profitable Mindset Podcast, everyone, where we unpack what's really driving the business world.
Yeah, excited to be here.
Today, we're going to be tackling a topic that's reshaping not only how companies operate, but also how investors make decisions. We're talking about ESG.
Absolutely.
Environmental and governance.
It's gone way beyond just being a buzzword, and it's at the heart of how businesses plan for success now.
It's really fascinating to see how each of those pieces, the environmental, the social, and the governance, how it affects everything from a company's, carbon footprint,
right,
all the way to like boardroom diversity and how they handle things like ethical sourcing.
I think one of the most compelling things that we're seeing is the link between ESG and financial performance. We're moving away from this idea that doing good and making a profit have to be separate things.
It makes you wonder how ESG went from like this niche ethical investing thing to being so central to corporate strategy.
Well, it's in a bunch of factors all coming together at once. Yeah.
We've seen a huge surge in activism from stakeholders. It's not just shareholders anymore. It's employees, customers, communities, governments. Everybody's demanding more transparency and accountability from companies. And they're making it very clear that a company's social and environmental impact are just as important as the profit they make.
Consumers are becoming a lot more discerning too, especially like younger generations.
Yeah.
They're really aligning themselves with brands that actually follow through on their ESG promises rather than just talking about it.
Absolutely. Consumer pressure is a huge driver. And then on top of that, you have these global crises like climate change that are pushing environmental concerns to the very front and center. And companies are understanding that they can't just ignore the role they play in contributing to or fixing these challenges.
It feels like a perfect storm pushing companies to really pay attention.
It really does.
So you have stakeholders demanding more, you have these global crises, and then you also have the regulatory landscape shifting too.
Yes. Governments are putting in place stricter ESG reporting requirements worldwide, and they're incentivizing sustainable practices with things like tax breaks and subsidies.
Yeah.
It seems like for companies, it's not really a question of if they need to comply. It's more like how.
Exactly. How are they going to adapt their strategies?
So we've got stakeholders demanding more global crises, driving action, and these regulations incentivizing change. It makes sense that companies are integrating ESG, but what's the actual proof that this impacts their bottom line?
Well, there's a lot more research now showing a very strong correlation between good ESG performance and financial success.
Oh, wow.
Studies by Harvard Business Review and MSCI show that companies with high ESG ratings tend to have better returns, less volatility, and even a lower cost of capital.
So it's not just some feel-good initiative, it's actually a smart business move.
Exactly. Investors are realizing that ESG factors can actually predict how viable a company will be in the long term.
Interesting.
Strong environmental risk management, fair treatment of employees, ethical governance, all of those are signs of a really stable and resilient investment.
So let's get into the specifics, starting with the E and ESG environmental.
Okay.
How are companies actually tackling things like climate change?
Well, the biggest shift we're seeing is the move away from fossil fuels and towards renewable energy.
Yeah.
We're seeing companies like Ørsted, which is a Danish company, totally transform themselves.
Wow.
They used to be super invested in oil and gas, but they made a really strategic decision to become a leader in offshore wind power.
Interesting. So they basically went all in on this new direction.
They did. They put a lot of money into research and development, formed partnerships with experts, and built a whole new supply chain for wind turbine parts.
It's a pretty bold move.
It was, but it paid off big time.
Oh, really? How so?
In the 5 years after going fully into renewables, their share price went up by over 150%.
Wow.
They really proved that sustainability can make you a lot of money.
That's a powerful example of walking the walk.
It is.
So what are some other companies taking action on the environmental front?
Well, Amazon, for instance, has made a commitment to reach net zero carbon emissions by 2040. It's part of their climate pledge.
I've heard of that.
They're spending a lot of money on electric delivery vehicles, renewable energy for their data centers, and even reforestation to offset their carbon footprint.
It seems like they're really going all in on sustainability.
Yeah, and they're not the only ones.
What other big companies are doing this?
Walmart, another huge retailer, is putting solar panels on their stores and distribution centers
Interesting.
to depend less on traditional energy sources.
Makes you wonder why more companies aren't following your lead.
I know, right? There are challenges, of course.
Yeah.
Like the upfront cost of switching to renewable energy can be a lot.
Mm-hmm.
And some companies are hesitant to make such big changes.
Makes sense.
But as these successful cases show, the cost of not doing anything is probably higher in the long run, both for their finances and their reputation.
That's a great point. And it's not just about energy, right? The environmental part of ESG also includes things like managing resources and reducing waste.
It does, absolutely.
So how are companies approaching those aspects?
Well, companies are trying to come up with new ways to be more efficient with resources. Take IKEA, for example. They've committed to using only renewable or recycled materials in all their products by 2030.
Wow. Okay.
They're designing their products to be durable and easy to repair. And they even have programs where you can bring back your old furniture to be recycled.
It seems like they're really embracing that whole circular economy concept.
They are. They want to keep their products in use for as long as possible.
Okay, so let's move on to the S in ESG social.
Okay.
What are some big trends we're seeing in how companies are addressing their social impact?
One major focus is employee well-being. Companies are finally starting to realize that happier employees are more productive. So they're offering competitive salaries and benefits, investing in things like mental health resources and professional development programs.
Sounds like they're finally treating employees as their most valuable asset.
Exactly.
Who are some of the companies leading the way in this area?
Well, Salesforce is always ranked as one of the best places to work.
Yeah, I've heard that.
They offer great benefits, flexible work arrangements, and even encourage employees to volunteer in their communities.
That's fantastic.
Yeah.
It also seems like companies are making DEI, or diversity, equity, and inclusion, a bigger priority.
DEI has become huge. And not just because it's the right thing to do, but because it actually makes business sense.
Right. Diverse teams bring different perspectives and experiences to the table.
Exactly. And that leads to more creativity and better decisions.
So it's about leveraging that power of diverse thinking.
Precisely.
What are some companies that are making concrete steps toward DEI?
Goldman Sachs, for instance, has said that they won't support companies going public if they don't have diverse boards.
Wow, that's a powerful statement.
It shows they're serious about using their influence for change.
Yeah.
Another big social issue is ethical supply chains. Consumers are a lot more aware now of where their products come from and the conditions they're made in.
Right.
They want to know that workers are treated fairly and that companies are sourcing materials responsibly.
It's like that out of sight, out of mind mentality is gone.
It really is. Consumers are demanding more transparency and accountability from companies.
So how are companies responding to these demands?
Well, companies like Nike, who had some controversy in the past over labor practices, are working really hard to be more open about their supply chains. They're making sure workers get fair wages, that working conditions are safe, and they're trying to source materials in sustainable ways.
So they're taking concrete steps to clean up their act.
They are.
Okay, so let's talk about the final part of ESG governance.
All right.
What does good governance look like when we're talking about ESG, and why is it so important?
Good governance is all about making sure a company is well-run, ethical, and accountable. It means having a strong and independent board of directors, transparent financial reporting, and ethical practices that go beyond just following the law.
So it's about building a culture of integrity.
Exactly.
Where everyone is accountable from the top down.
Yes.
And why is this kind of governance so important for investors?
Well, strong governance actually reduces risk. A company with good governance is less likely to be involved in scandals or lawsuits or make decisions that hurt their reputation and their bottom line.
So it's a good indicator of a company's stability and reliability in the long term.
It is, absolutely.
Can you give us some examples of companies that have either done well because of good governance or struggled because of a lack of it?
Sure. A classic example of good governance is Johnson & Johnson. Back in the 1980s, they had that big crisis with the Tylenol tampering incidents.
Oh, yeah, I remember hearing about that.
Their response was fast and transparent, guided by strong ethical principles, and they actually came out of it stronger.
Wow.
They recalled millions of bottles, redesigned their packaging, and came up with tamper-resistant seals.
That's a really good example of how decisive action and transparency when it comes from good governance can turn a crisis around.
It is. It shows how important it is to be prepared and act quickly and ethically.
So are there examples of companies that haven't fared so well because of governance issues?
Unfortunately, yes.
Oh.
Wells Fargo is a good example of what can happen when governance fails. They were caught creating millions of fake accounts without their customers' knowledge just to boost sales numbers.
Oh, wow.
This resulted in huge fines, tons of reputational damage, and a massive loss of trust from both customers and investors.
It's a stark reminder of how damaging poor governance can be.
It really is.
So what are some trends we're seeing in corporate governance specifically related to ESG?
Well, one big trend is that more companies are adopting ESG reporting standards. Frameworks like the Global Reporting Initiative, or GRI, and the Sustainability Accounting Standards Board, or SSB, are giving companies guidelines for how to disclose their ESG performance in a consistent and transparent way.
So it's about going beyond just voluntary reporting.
Yeah.
And creating a more standardized approach.
Exactly.
Why is this trend happening?
It's partly driven by investors who want more comparable ESG data. They want to be able to compare apples to apples when they're evaluating different companies.
That makes sense.
It's about making informed investment decisions.
So what else is shaping the governance landscape?
We're also seeing an increase in shareholder activism, where investors are using their power to push companies toward more sustainable and responsible practices.
Oh, interesting.
A great example of this is Engine Number One. They're an activist hedge fund that successfully campaigned for board seats at ExxonMobil, a company that was seen as being behind on climate action.
Wow, that's bold.
They argued that moving toward renewable energy was essential for ExxonMobil's long-term success.
And it worked.
It did. It shows that investors are becoming more and more influential when it comes to ESG.
Okay, so we've talked about stakeholder demands, the rise of ESG reporting and shareholder activism. But there's another key piece of the ESG puzzle, data and analytics.
Yes.
How are companies and investors actually using data to measure and track ESG performance?
That's a great question. There's a ton of ESG data available now, way more than there used to be, but it's also become more complex.
So how are people making sense of it all?
Well, we have this whole ecosystem of ESG rating agencies now.
Okay.
Like MSCI, Sustainalytics, and FTSE Russell. They analyze huge amounts of data to evaluate companies and then give investors these comparable ESG scores.
So they're looking at a company's carbon emissions, their water usage, employee diversity, their board composition, even things like their political contributions, to assess their overall ESG performance.
Exactly.
It sounds like a credit score, but for sustainability.
You could say that these ratings are becoming super important for investors who want a quick snapshot of how a company's doing on ESG.
But it's important to remember that not all ESG ratings are created equal, right?
But that's a really good point.
Could you talk a little bit more about that? What are some of the things investors should be aware of when they're looking at ESG ratings?
Well, one challenge is that there's no universal standard for ESG reporting yet. So different rating agencies might use different methods, and they might prioritize certain factors more heavily than others.
Right.
This can lead to a situation where a company gets a high score from one agency, but a lower score from another.
Yeah, that makes it tricky for investors who are trying to compare different companies.
It does.
What are some tips investors can use to sort through these differences?
Don't just rely on one ESG rating. Look at ratings from multiple agencies.
Read the reports they put out so you understand their methodologies.
Okay.
And think about which factors are most important for the specific industry or company you're looking at.
So, for example, if you're looking at an energy company, carbon emissions and renewable energy investments are going to be more important than something like their board diversity.
Exactly, but board diversity is still important.
Of course, it sounds like being a careful and critical thinker is super important for investors in the ESG space.
Absolutely.
Especially because the world of ESG data is only going to get more complex as new metrics emerge and the amount of data keeps growing.
And that's where technology comes in.
Oh, okay. Now this is where it gets really interesting.
It does.
Tell me more about how technology is being used to manage and understand all this ESG data.
Well, we're starting to see artificial intelligence and machine learning used to process these huge data sets and find trends and patterns that humans might miss.
So it's like having this super-powered ESG analyst at your fingertips. Wow. And AI can analyze all kinds of data, like news articles, social media posts, and even satellite imagery to get a much more complete picture of a company's ESG performance.
AI is taking ESG analysis to a whole new level.
It is.
Okay, so we've got the data, the ratings, and the technology to make sense of it all. But how are investors actually putting this knowledge into practice? What are some of the main ESG investment strategies out there?
Well, there are lots of different ESG strategies, and they each have their own approach and level of impact.
Okay.
Some investors prefer what's called a negative screening approach, where they exclude certain industries or companies that don't align with their values.
So like they might avoid investing in fossil fuel companies or companies with bad track records on human rights.
Exactly. It's about drawing a line in the sand
and
saying, these are my deal breakers.
So what about the investors who want to take a more proactive approach?
Well, they might use positive screening, where they actively look for companies that are leaders in ESG within their industries.
Okay, so they're looking for companies that are going above and beyond.
They are. They want to support companies that are really making a difference.
And what about investors who want to align their investments with specific ESG themes?
That's called thematic investing. So they might focus on things like clean energy, sustainable agriculture, or gender diversity.
So they're looking at the big trends shaping the world.
They are.
And investing in the solutions.
Exactly.
Okay, so it seems like there's an ESG strategy for everyone.
There really is. It all depends on your values and investment goals.
And it's great to see that as the ESG landscape evolves, there are even more innovative approaches coming out.
Absolutely.
Like ESG integration, where investors actually incorporate ESG factors into their traditional financial analysis. So it's about recognizing that ESG factors can have a real impact on a company's financial performance.
It's not just about doing good. It's about making smart investments for the future.
Okay, so now for the big question, though, the one everyone's thinking about, greenwashing.
Okay.
Tell me more about that and why it's such a big deal for investors.
Greenwashing is basically when companies try to look more sustainable or socially responsible than they actually are.
So they're not really walking the walk.
They might exaggerate their environmental efforts to make misleading claims or cherry-pick data to highlight the good stuff and downplay the bad.
So it's a case of fake it till you make it, but with potentially serious consequences.
It is, and it's a problem because it undermines trust in the whole ESG movement. It misleads investors, hurts the reputation of companies that are actually doing good, and slows down progress toward a more sustainable future.
So how can investors avoid falling for greenwashing? What are some red flags they should be looking for?
It all comes down to due diligence. Look beyond the marketing hype and really dig into their ESG reports.
Okay.
Look for third-party certifications and independent audits, and be wary of companies that make vague claims without concrete evidence.
So basically, don't take everything at face value.
Exactly. Be a skeptical ESG detective.
I love that analogy.
Ask tough questions, compare their claims to what they actually do, and be wary of anything that sounds too good to be true.
Great advice.
Thank you.
Okay, I know we can't talk about ESG without bringing up technology. It seems like technology is playing a bigger and bigger role, not just in data analysis, but in helping companies actually achieve their ESG goals.
Absolutely.
Can you elaborate on that?
Sure. Technology is becoming essential for companies to measure, manage, and improve their ESG performance. For example, AI is being used to make buildings and factories more energy efficient.
Okay.
Blockchain is helping to create more transparent and ethical supply chains. And big data is allowing companies to track their environmental impact more precisely.
So technology is like this powerful tool that's enabling companies to make real progress on ESG.
It is, and as technologies like artificial intelligence, blockchain, and the Internet of Things keep developing, we can expect even more innovative ways for companies to become more sustainable and responsible.
It's exciting to think about the possibilities.
It really is.
And it's not just companies that are benefiting, right?
Right.
How is technology changing the way investors approach ESG?
Well, as we talked about earlier, technology is already helping to analyze huge amounts of ESG data and give investors insights that they couldn't get manually.
Right.
And this is leading to sophisticated new tools and platforms that help investors screen companies, build portfolios, and track their ESG performance over time. It's about giving investors the power to make more informed and impactful decisions.
That's great.
It is.
But ESG is still a relatively new concept for a lot of investors.
Yeah.
What can they do to stay ahead of the curve and build a portfolio that truly reflects their ESG goals?
Well, the first and most important thing is education. Stay updated on the latest trends, regulations, and technologies. Read industry publications, attend webinars, follow thought leaders. ESG is constantly changing, so you need to keep learning.
It's not a one-time thing.
No, it's an ongoing process.
So once you have a good understanding of the basics, what's the next step?
Define your personal ESG goals. What issues are most important to you?
Right.
What kind of impact do you want to make? Once you know what your priorities are, it's much easier to choose investments that reflect those values.
So are you someone who's more passionate about climate change, mitigation, social justice?
Yeah.
Ethical corporate governance?
Exactly. Figure out what matters most to you.
Okay. What else?
Don't be afraid to use the tools and resources that are out there. There are a lot of ESG-focused funds, ETFs, and online platforms that can help you build a diverse and impactful portfolio.
Okay.
And you can always talk to financial advisors who specialize in ESG investing to get personalized advice.
That makes sense.
Yeah.
And of course, do your own research. Take the time to understand how the companies you're considering investing in are actually performing on ESG.
Right.
Don't just rely on marketing materials.
Right.
Look at their sustainability reports, their third-party certifications, and their track record on social and governance issues.
Informed investors are empowered investors.
I like that.
Yeah.
ESG is complex. There's a lot to learn.
There is.
But it can also be incredibly rewarding,
Absolutely.
both from a financial standpoint and from the perspective of knowing that you're making a positive difference.
That's the goal.
Okay, so we've explored how ESG is changing the way investors think and act. But it's not just about investments, right? ESG is also influencing how companies operate and develop their strategies across all kinds of industries.
That's right. Companies are realizing that integrating ESG into their core business practices can lead to innovation efficiency and long-term value.
So it's not just about checking boxes or managing risks. It's about changing how businesses operate in a way that benefits both their bottom line and the world.
Exactly. It's a more holistic approach to business, where financial success is linked to environmental sustainability, social responsibility, and good governance.
That's a great vision.
Yeah.
But as with any big change, there are bound to be challenges.
Yeah.
What are some of the hurdles companies face when they try to integrate ESG into their strategies?
Well, one of the biggest challenges is the lack of standardized ESG reporting. We've talked about how there's no one universally accepted way to measure and report ESG performance.
Right.
And this makes it really hard to compare companies, especially across different industries and regions.
It's like trying to solve a puzzle where the pieces don't quite fit.
That's a good way to put it.
Okay.
This lack of consistency makes things confusing for both companies and investors.
Yeah, I could see that.
And it also opens the door to greenwashing because it's harder for investors and consumers to tell which companies are truly committed to ESG.
So it's like a double-edged sword.
It is.
We have more data than ever before, but it's harder to figure out what's real and what's just marketing.
Exactly.
So what other challenges are companies dealing with?
Well, implementing ESG initiatives can be expensive, especially for smaller businesses.
Yeah.
Things like transitioning to renewable energy, improving supply chain transparency, addressing social issues in the workplace.
All of these things cost money.
They do, and they might not see an immediate return on those investments.
So it's short-term costs versus long-term gains.
Exactly. And some companies might be hesitant to make those investments.
Especially if they don't see a clear payoff right away.
Yeah, but the truth is that doing nothing can cost even more in the long run. Companies that ignore ESG risk falling behind their competitors, facing penalties from regulators, and losing the trust of customers who are demanding more sustainable and responsible products.
It's a classic pay now or pay later situation, but with much higher stakes.
Exactly. And the pressure to act is only going to get stronger as more investors prioritize ESG.
Okay, so we've talked about the challenges for companies, but what about investors? What are some of the big challenges they face when trying to build an ESG-conscious portfolio?
Well, one challenge is just the sheer amount of information out there and the complexity of the issues.
Right. ESG covers a huge range of topics.
It does. It's environmental, social, and governance.
Yeah.
It's a lot to keep up with.
It can be overwhelming.
It can, and sometimes it leads to analysis paralysis.
What do you mean by that?
It's when investors get so overwhelmed that they're afraid to make any decisions at all.
Oh, okay.
They're stuck.
So how can investors avoid getting bogged down in all the complexity and actually start putting their ESG principles into action?
It's about finding a balance between doing your research and actually taking action.
Okay.
Don't let the fear of making a mistake stop you from getting started.
Right.
Start by figuring out what your ESG goals are. Choose an investment approach that aligns with your values, and then slowly start incorporating ESG factors into your decision-making.
So it's a step-by-step process.
It is.
Okay.
And don't be afraid to ask for help from financial advisors who know about ESG investing.
That makes sense.
Yeah. They can help you navigate the complexity, find opportunities, and build a portfolio that matches your values and your financial goals.
ESG can seem intimidating at first, but there are resources out there to help.
Absolutely.
Okay, we've talked about the challenges, but I want to switch gears and talk about the opportunities.
Okay.
What are some of the most exciting developments and trends you're seeing in the ESG space?
Well, one really encouraging trend is that more and more mainstream investors are becoming aware of and adopting ESG principles.
So it's not just a niche market anymore.
It's not.
That's great.
It's becoming a core part of investment strategies for big institutions like pension funds and mutual funds, and even individual investors.
So ESG is going mainstream.
It is, and that's creating this huge wave of capital flowing toward sustainable and responsible businesses.
Wow, that's incredible.
It is.
So this is driving innovation.
Yes.
Encouraging companies to raise their ESG standards and ultimately accelerating progress toward a more sustainable future.
It's a win-win.
So ESG is creating a virtuous cycle.
It is.
Where investor demand is leading to real change in the corporate world.
Exactly.
And as the market for ESG investments keeps growing, we can expect even more innovation and progress.
Absolutely.
What other trends are you particularly excited about?
I'm excited about how technology can speed up ESG progress.
We talked about how AI and machine learning can analyze data, but there's so much more to it than that.
There is.
So tell me more. I'm eager to hear how technology is being used in these new and innovative ways.
Well, for instance, blockchain is being used to create more transparent and traceable supply chains, which is helping to combat things like deforestation, forced labor, and conflict minerals.
Oh, that's amazing.
It lets consumers track a product's journey from where it's made all the way to the store.
And that ensures that it meets ethical and sustainable standards.
Right.
So blockchain is bringing a whole new level of accountability to global supply chains.
It is.
And it's not just blockchain. AI is also being used in really interesting ways.
Yes.
Like what?
Like optimizing energy efficiency in buildings and factories, developing more sustainable farming practices, and even creating personalized ESG investment recommendations for individual investors.
So like AI can analyze someone's values and investment goals.
Exactly.
And suggest companies and funds that align with their ESG priorities.
Precisely.
Wow, it seems like we're just scratching the surface of what's possible when you combine technology and ESG.
The potential is huge.
Okay, so looking ahead to the future of ESG, what are some of the key trends and developments that investors and business leaders should keep their eyes on?
One trend that I think is going to continue is the growing demand for standardized ESG reporting. Investors are getting increasingly frustrated with the lack of consistency and comparability in ESG data.
Right.
And they're demanding more transparency and accountability from companies.
Yeah, it feels like the Wild West of ESG data right now.
It does. Everyone's using their own metrics and frameworks.
Exactly.
But that's starting to change.
Oh, good.
Organizations like the Sustainability Accounting Standards Board, or ASB, and the Task Force on Climate-Related Financial Disclosures, or TCFD, are coming up with frameworks for ESG reporting that are getting a lot of attention around the world.
Interesting.
These frameworks give companies clear instructions on how to report their ESG performance in a way that's consistent and easy to compare.
So it's like creating this universal language for ESG reporting.
Exactly. So investors can finally compare apples to apples.
Yeah.
And as these standards become more widely used, we're going to see more reliable and comparable ESG data.
Right.
Which will make it much easier for investors to understand how companies are doing.
And make better decisions.
Exactly.
That would be a huge step forward for ESG.
It would.
More transparency, more accountability.
It would also make it harder for companies to get away with greenwashing.
Right, because everyone would be playing by the same rules.
Exactly.
Okay, so what about the role of technology in all of this? Can technology help with these data challenges?
Absolutely. Technology is essential for gathering, verifying, and analyzing ESG data. For example, blockchain can create records of ESG data that can't be tampered with.
Oh, wow.
And AI can be used to find patterns and inconsistencies in the data.
So technology can help make sure that ESG data is accurate and reliable.
It can.
Which makes it more trustworthy for investors.
Exactly. And as technology keeps getting better, we're going to see even more innovative solutions that will help improve the quality and transparency of ESG data.
So let's shift gears a bit and talk about some specific examples of how companies are actually putting ESG principles into practice in different industries.
Sure, let's start with the energy sector, which is at the forefront of this whole transition to a low-carbon economy.
Makes sense. We already talked about Ørsted's success with offshore wind power.
Right.
But what are some other energy companies doing to integrate ESG?
A lot of the traditional oil and gas companies are diversifying their businesses by investing in renewable energy sources like solar and wind power.
So they're recognizing that they need to adapt to this changing energy landscape.
They are. They see that the future is in cleaner energy sources.
What are some specific companies that are doing this?
Well, companies like BP and Shell have set really ambitious targets for reducing our carbon emissions, and they're investing billions of dollars in renewable energy projects.
Wow, that's huge.
They're also looking into things like carbon capture and storage to try and reduce their environmental impact.
That's a pretty big change for companies that have always relied so heavily on fossil fuels.
It is, but they're facing a lot of pressure to change from investors, consumers, and regulators. They're realizing that investing in renewables isn't just good for the planet. It's good for business, too.
It seems like a lot of industries are going through similar transformations.
They are.
So how is ESG influencing strategy in other sectors, like technology or consumer goods?
In the tech industry, we're seeing companies like Microsoft and Google commit to carbon neutrality and invest in renewable energy to power their data center.
Right, because those data centers use a lot of energy.
They do.
And tech companies in general have a pretty big environmental footprint.
They do, especially with all the electronic waste.
Yeah, people are constantly upgrading their devices.
Exactly. So tech companies are starting to realize that sustainability is crucial for their long-term success. And they're taking steps to reduce their environmental impact across all their operations and supply chains.
What about the consumer goods sector? How are they approaching ESG?
They're focusing on things like sourcing materials sustainably, reducing packaging waste, and improving the social and environmental conditions in their supply chains.
So they're thinking about the whole life cycle of their products.
Exactly.
What are some companies that are doing this well?
Unilever and Procter & Gamble are good examples. They've set some really ambitious goals to reduce their environmental footprint and improve their social impact.
Like what kinds of goals?
Well, they're doing things like sourcing sustainable palm oil and making sure that workers in their factories are treated fairly.
So they're taking a holistic approach to sustainability.
They are. They're trying to address both environmental and social issues.
And it seems like consumers are demanding this kind of change.
They are. They want products that are good for the planet and good for people.
So companies are realizing that sustainable practices can also help them attract customers and build a better reputation.
Exactly. It's good for the planet, good for people, and good for business.
It's a win-win all around.
It is. And as these big companies start to lead the way, it's influencing their suppliers to adopt more sustainable practices as well.
So ESG is having a ripple effect throughout entire industries.
It is. It's about creating a more sustainable and responsible system.
And that requires everyone to work together.
Exactly.
Okay, so we've talked a lot about how companies are putting ESG into practice, but what about investors? What are some things they can actually do to build a portfolio that reflects their ESG values?
The first thing is to figure out what your personal ESG values and priorities are. What issues are most important to you? What kind of impact do you want to make with your investments?
It's about aligning your money with your values.
Exactly. Once you know what your priorities are, you can start researching companies and funds that match those values.
Okay, so what are some good places to start?
You can look at ESG ratings, read sustainability reports, and go to investor conferences.
Sounds like there's a lot of information out there for investors who are willing to do their research.
There is, and there are also resources to help you make sense of it all. There are financial advisors who specialize in sustainable investing and online platforms that provide ESG data and analysis.
That's good to know.
Yeah.
Okay, so we talked earlier about different investment strategies like negative screening, positive screening and thematic investing. Can you remind us how those work?
Sure. Negative screening is basically excluding companies or industries that don't meet your ESG criteria. So you might avoid fossil fuel companies or companies with bad track records on human rights.
So you're drawing a line and saying, these are my deal breakers.
Exactly.
And positive screening.
Positive screening is about finding companies that are leading the way on ESG in their industries.
So you're looking for the companies that are going above and beyond.
Right. You want to invest in companies that are making a real difference.
And thematic investing.
Thematic investing is aligning your investments with specific ESG themes like renewable energy, sustainable agriculture, or gender equality.
So it seems like there are a lot of different ways for investors to build an ESG-focused portfolio.
There are. It's about finding the approach that works best for you and your goals.
Okay, and as this whole area of ESG investing evolves, there are even more options becoming available.
Yeah, like impact investing, which focuses on investments that create positive social or environmental impact along with financial returns.
That's great.
It is.
So, to sum it up, it's about finding an investment strategy that fits your values, your risk tolerance, and your financial goals.
Exactly. And it's important to remember that ESG investing is a long-term game. You might not get rich quick, but you're supporting companies that are trying to build a better future.
It's about recognizing that you can make money and do good at the same time.
Absolutely. And as more people demand ESG investments, we're going to see more companies taking action to create positive change.
It's an exciting time to be an investor who cares about making a difference.
It is. And as more investors demand transparency and accountability from companies, we're going to see a shift towards a more sustainable and just economy.
Now, we've talked about the lack of standardized ESG reporting as a challenge. What are some potential solutions to that problem?
Well, one solution is to create and adopt universal ESG reporting standards.
So everyone's speaking the same language.
Exactly.
What are some of the organizations that are working on this?
The Sustainability Accounting Standards Board, or SSB, and the Task Force on Climate-Related Financial Disclosures, or TCFD, are developing frameworks that could be used globally.
So if these standards become widely accepted, we could see more consistent and comparable ESG data.
Right, which would make it much easier for investors to assess companies' performance and make informed decisions.
That would be a huge step forward.
It would, and it would also make it harder for companies to greenwash.
Because they wouldn't be able to hide behind inconsistent data.
Exactly.
So what about technology? Can it help with these ESG data challenges?
Absolutely. Technology can play a really important role in collecting, verifying, and analyzing ESG data. For instance, blockchain can be used to create records of ESG data that are tamper-proof.
Wow, that's cool.
And AI can help identify patterns in the data that might suggest greenwashing.
So technology can make ESG data more trustworthy for investors.
It can. And as technology keeps getting better, we can expect even more innovative solutions to improve ESG data quality and transparency.
It sounds like the future of ESG is bright.
It does.
Both companies and investors are embracing these principles and working toward a more sustainable and equitable future.
I agree. It's an exciting time to be involved in this space, and I'm optimistic about the positive impact ESG will have in the years to come.
It's a reminder that we all have a role to play in creating a more sustainable and responsible world.
Absolutely.
But before we wrap up, I'd like to get your take on some of the potential risks and challenges that come with this growing focus on ESG investing.
Okay.
What are some things that investors and companies need to watch out for as ESG becomes more mainstream?
One thing to be mindful of is the potential for an ESG bubble.
Okay.
Where companies that are seen as ESG friendly might become overvalued.
So kind of like when any investment trend gets really hyped up?
Exactly.
The excitement can lead to inflated prices that might not actually reflect the company's long-term performance.
Right. It's important for investors to really dig deep and evaluate companies based on their actual ESG performance, not just on their marketing or how ESG friendly they seem on the surface.
So due diligence and careful analysis are crucial.
Absolutely.
What are some other potential risks or challenges that we should be thinking about?
Well, another risk is greenwashing or social washing.
Yeah, we touched on that earlier.
Right. It's when companies exaggerate their ESG efforts to attract investors or boost their image without actually changing their practices.
And that's a problem because it undermines trust in the whole ESG movement.
It does.
And it makes it harder for investors to find companies that are truly walking the walk.
Exactly. That's why transparency and accountability are so important. Investors need to be able to verify what companies are saying and check their ESG performance against reliable data.
So it's a call for more scrutiny from investors.
Yes.
But also for stronger regulations to prevent greenwashing and encourage transparency.
Absolutely. And there's also the risk of unintended consequences from ESG investing.
Oh, interesting. Like what?
Well, for instance, if investors divest from entire industries like fossil fuels, it could lead to job losses and economic problems in certain regions without really solving the underlying environmental issues.
So it's important to think about the bigger social and economic impacts of ESG investing. Make sure these initiatives are implemented fairly and equitably.
Exactly. It's about finding solutions that address environmental and social challenges while also promoting economic growth and well-being for everyone.
It sounds like ESG investing is a complex area with both opportunities and risks to consider.
It is, but I think if we're aware of the challenges and work together to address them, we can use ESG investing to create a more sustainable and equitable world.
That's a really positive message.
Yeah.
It's about understanding that we all have a role to play in building a better future. And ESG investing is one of the ways we can do that.
Absolutely. It's about putting your money where your values are.
It's been a fascinating conversation.
It has.
Thank you so much for sharing your insights with us today.
My pleasure.
And to our listeners, thank you for joining us on this episode of the Profitable Mindset Podcast. We hope this discussion has given you a better understanding of how ESG is changing the business world and how you can incorporate these principles into your own investment decisions. And as always, stay tuned for more insights on the trends shaping the business world and empowering you to achieve your profitable mindset.